Most people never invest because they think $100 isn't enough. You look at your bank account and tell yourself you'll start later. Later when you make more money. Later when life feels less expensive. Later when you finally have everything figured out. But here's the problem nobody talks about. The market doesn't care how long you wait. Every year you delay, your future loses something it can never recover. And one ordinary warehouse worker was about to discover that firsthand. Because what happened after his first $100 changed everything. The lesson in this story is simple. It's called investing in a low-cost S&P 500 index fund. That sounds complicated, but it really means buying tiny pieces of hundreds of America's biggest companies. You don't need thousands of dollars. You don't need to be an expert. You don't need perfect timing. You only need a place to start. And for Jason Miller, that place turned out to be $100.
Chapter 1. The Life on Pause.
Jason Miller's alarm rang every morning at 5:15 sharp. He lived alone in a small apartment in Phoenix, Arizona. At 26, he worked at an Amazon fulfillment warehouse. His yearly income was about $42,000 before taxes. After taxes, he brought home roughly $2,700 monthly. His rent alone cost $1,100 every month. Utilities, internet, and phone bills added another $200. Groceries and gas usually consumed around $500 monthly. His car payment took another $400 from every paycheck. By month end, very little money remained in Jason's account. Jason had managed to save exactly $300. He also carried about $2,800 in credit card debt. Every month he promised himself things would improve soon. But he believed investing was only for wealthy people. Whenever he heard stock market conversations, he quietly tuned out. He assumed successful investors started with $10,000 or more. $300 felt too small to make any difference. So the money stayed untouched inside his savings account. Month after month, the balance barely changed at all. And year after year, Jason stayed exactly where he started. At work, Jason heard coworkers discussing retirement accounts during lunch. Some talked about investments growing while they slept. Others mentioned company stock and index funds casually. Jason nodded along, but rarely joined those conversations. He felt like everyone understood a game he never learned. One afternoon, a coworker noticed Jason sitting quietly. The coworker asked why he never talked about investing. Jason laughed and said he didn't have enough money. The coworker smiled and pulled out his phone. Then, he said something that made Jason stop completely. Chapter 2. The Conversation That Changed Everything. Jason stared at the phone and frowned through his body language. You started with $100. Mark nodded and showed Jason his investment account. Jason expected to see millions. Instead, the account looked surprisingly normal. If you only started with $100, how did this happen? Mark laughed and said most people ask the wrong question. The better question is why I started so early. Jason leaned closer, trying to understand what he was missing. For the first time, investing felt less like a secret club and more like something an ordinary person could actually do. Mark opened the account history and scrolled to the beginning. The first deposit showed exactly $100. Jason stared at the screen in disbelief. There was no hidden inheritance and no lottery win. Mark explained that investing was not about getting rich fast. It was about giving time a chance to work. He added small amounts whenever he got paid. The money grew slowly at first, almost invisibly. But after several years, the growth began accelerating. Jason realized he had been focusing on money instead of time. Mark asked Jason a simple question. Do you think you need to buy an entire company share to start investing? Jason immediately said yes. That was exactly what had always stopped him. Mark showed him a list of popular companies on his phone. Some shares cost hundreds of dollars, others cost even more than $1,000. Jason looked at the prices and felt discouraged again. Then, Mark explained something called fractional shares. Instead of buying a whole share, investors could buy a small piece of one. That night, Jason opened his first investment account, but when the deposit screen appeared, his finger froze above the button, and he wondered if he was really ready to risk his money. Chapter 3. The First $100. Jason sat quietly and stared at the deposit screen again. The account was ready, but the button remained untouched. He opened his banking app and checked his balance carefully. The number looked smaller now than it ever had. Jason thought about groceries, bills, and unexpected emergencies. Then he remembered Mark's account history from earlier. Nobody started with huge amounts or perfect timing. Slowly, Jason typed $100 into the deposit field. His finger hovered for several seconds before finally pressing confirm. The screen refreshed, and Jason officially became an investor. Jason spent the next hour reading about different investment options. Most choices looked confusing, with charts stretching in every direction. He remembered Mark mentioning index funds during their conversation. Jason searched the term and opened several beginner guides. The explanations felt simpler than everything else he had seen. One fund owned pieces of hundreds of different companies. Instead of choosing winners, the fund owned the entire market. Jason compared the fund details before making a final decision. Then he selected his first index fund and reviewed everything carefully. After one last look, Jason completed the purchase and leaned back. The next morning, Jason checked his account before leaving work. Nothing had changed, but he stared anyway for several minutes. During lunch, he opened the app and checked again. That evening, he refreshed the account while eating dinner alone. The following days looked exactly the same every single time. Jason began checking before work, after work, and before sleeping. Mark laughed when Jason admitted checking multiple times daily. He refreshed the app again, then suddenly noticed red numbers. The screen showed losses, and the account value moved downward. Jason froze at his desk while the market kept falling. Chapter 4. The Mistake Almost Everyone Makes. Jason, staring at losses he never expected. The red numbers looked larger every time he refreshed. He opened the app repeatedly during breakfast and work. Each refresh showed the account moving lower than before. Jason started wondering if investing had been a mistake. The small loss felt much bigger inside his mind. He searched videos predicting crashes and market disasters. Most headlines warned investors to get out immediately. Jason moved his finger toward the sell button slowly. Then, a notification from Mark appeared on his screen. Mark's message told Jason to stop watching daily movements. Instead, he suggested studying what happened after past crashes. That night, Jason searched famous market crashes throughout history. He expected stories ending with permanent losses and failures. Instead, he found markets eventually recovering after every major crash. Some recoveries took years, but they still happened. Jason opened chart after chart, comparing crashes and rebounds. The pattern kept repeating, no matter which decade appeared. Slowly, he stopped focusing on daily red numbers. Then, Jason discovered something even more surprising about investors. Jason noticed gambling stories always promised fast money and shortcuts. Investment stories focused on patience, ownership, and long waiting periods. He compared lottery tickets with pieces of real businesses. The difference suddenly looked much larger than before. Gamblers chased quick wins, while investors bought future growth. Jason reviewed companies inside his index fund one evening. He realized he actually owned tiny pieces of them. His account remained negative, but his thinking started changing. Then another opportunity appeared, to invest an additional $100. Jason stared at the deposit button, unable to decide.
Chapter 5. Building the Habit.
The next morning, Jason still had not pressed deposit. During breakfast, he kept thinking about Mark's earlier advice. Mark once said consistency mattered more than perfect timing. That idea followed Jason throughout his entire workday. After work, he opened his investment app again. Instead of guessing, Jason searched automatic investing settings. He discovered monthly deposits could happen without remembering. Jason entered a schedule and reviewed every detail carefully. Then he hovered above the confirmation button once more. Jason finally pressed confirm and activated the automatic investment plan. The next morning, he opened the app before leaving work. His balance barely changed, but he kept refreshing repeatedly. During lunch, he checked again while waiting for food. Later that evening, he checked before turning off lights. Days passed, and Jason repeated the same routine constantly. One weekend, Mark noticed Jason staring at market updates. Mark said daily movements rarely matter for long-term investors. That sentence stayed with Jason longer than expected. The following morning, he left home without opening the app. Jason stopped chasing prices and focused on improving his income. He picked up extra shifts whenever opportunities appeared at work. Each paycheck arrived, and another investment happened automatically afterward. The market moved daily, but Jason rarely opened the app. His attention shifted towards skills, work performance, and consistency. Months passed as small investments quietly stacked in the background. Even during busy weeks, the automatic plan never stopped. 6 months later, Jason noticed he had not checked once. That evening, he opened the investment app after dinner. The account loaded slowly while Jason stared at the screen.
Chapter 6. What the numbers really meant.
Jason finally opened the account after avoiding it for months. The screen loaded slowly while he leaned closer to check. A small green number appeared where red numbers once lived. He refreshed the page twice before trusting what he saw. The account balance stood higher than his total deposits. Years of market history suddenly felt more believable now. Mark's earlier lessons echoed while Jason reviewed every transaction. The chart climbed steadily despite several drops along the way. Jason compared old screenshots and noticed the difference clearly. He stared quietly at the screen, realizing something had changed. Jason noticed the balance changed even when markets moved slowly. The small deposits kept appearing month after month without effort. He spent less time watching charts and more time working. Each contribution looked ordinary, but together they formed momentum. For the first time, the habit seemed bigger than returns. Realizes the habit matters more than returns. Jason stopped counting gains and started tracking monthly contributions. Each deposit arrived quietly, whether markets moved up or down. His account grew because he kept showing up every month. The routine felt ordinary, but the results slowly stacked higher. Looking back, Jason noticed consistency had done most of the work. Jason stopped searching for quick wins and focused on years. The account moved up and down, but contributions never stopped. He noticed time was doing more work than predictions. Small monthly investments quietly stacked on top of each other. The market no longer felt like a game to beat. He started viewing shares as ownership instead of lottery tickets. Future goals began feeling closer with every passing month. Then, Jason compared today's balance with where he started. The difference surprised him more than any market headline. One realization suddenly changed how he saw money forever.
Chapter 7. The question changed. Jason stared at old notes he once believed without question.
Years earlier, he thought investing belonged only to wealthy people. He remembered delaying decisions while waiting for perfect conditions. Those delays
quietly stole time that never returned again. His first investment had been small, yet changed everything. The account proved action mattered more than endless preparation. Jason compared old fears against what actually happened. Most of the worries never became real problems. Now, he measured progress differently than he once did. One question kept repeating as he reviewed the journey. Jason stopped chasing shortcuts and followed the same simple process. Each paycheck arrived, and his investing transfer happened automatically. He checked progress monthly instead of watching every market movement. The growing balance felt quieter than he once expected. His budget no longer felt like a list of restrictions. Every dollar now had a purpose before leaving his account. Unexpected expenses still appeared, but they caused less disruption. Jason noticed financial decisions becoming easier with repetition. The account kept growing while he focused on daily life. Money finally felt like a tool instead of a constant problem. Jason stopped asking when he would finally feel financially ready. He started asking where his next $100 should work. Old doubts still appeared, but they stayed shorter each month. His paycheck felt less temporary once every dollar had purpose. He watched expenses carefully without treating money like an enemy. The investment account became a tool instead of a scoreboard. Years ahead finally seemed closer than the next payday. Small deposits looked ordinary, yet their future value felt enormous. One question suddenly connected every lesson he had learned. The answer was simpler than he ever expected before. Jason learned starting early mattered more than starting with thousands. His first investment was small, but the habit kept growing. The market moved up and down, yet he kept contributing. Index funds gave him ownership across hundreds of companies instantly. He stopped chasing perfect timing and focused on steady action. Every month, another $100 quietly joined the account. The numbers grew because consistency worked, even during ordinary days. His financial future changed when he stopped waiting to feel ready. The question was never how much money he needed first. It was how soon he could stop waiting and start building.